All right. Welcome to Talk Data to Me, episode 6 in the series that I'm doing around AI. I've been saying this a lot, so maybe this will be the last time I say it. So it's kind of focused towards AI, but much more focused around the data fundamentals and all the bits and pieces that need to go into that. And I've had some really interesting conversations, and today's one is actually, I guess, relatively different. I've been talking to people from banks and retailers and things like that. But I've got Chris Ball joining me from Finch Technologies, who's a fintech company, a technology company, as per the name. And we're going to be talking a lot about financial inclusion and the role, I guess, that data analytics plays within that. So, Chris, welcome to the show. How's it going?
Yeah, awesome, Craig. Thanks so much for having me. And yeah, going well, man. Thank you.
Good stuff. So the one thing that so close to my heart, and this is a tangent, but also a trail runner, like myself, like many people out there, getting into it. Also doing UTCT 55. I'm putting it out there now, so you have to do it.
I'm doing it. I've entered, and now everyone knows. So
Yeah.
something to hold me accountable to it, I guess.
Yeah, absolutely. Yeah, I find that's the best thing to do is be one of those annoying people that just tells everybody that you're doing an ultra trail, and then you're kind of committed to the whole thing.
Yeah, only a broken leg can get you out of this one now.
Yeah, absolutely. So let's talk a little bit about data around that just for a couple of minutes. How do you sort of monitor your data around your running, your fitness, all that sort of thing? Or do you kind of just get out there, run, feel it, versus kind of looking at the Strava and the Garmin and all these other sorts of things to kind of understand your metrics?
Should have seen this question coming from a long way away, but although I work in the data world, I guess running is one of those places that I try actually escape data and escape the kind of structure that comes from it. So I think, one of the things that I enjoy about trail running particularly is that it is an opportunity just to get out and run how you feel, instead of necessarily mapping everything out and hitting metrics that you would if you were to maybe say road running. But as I say that, I am on Strava and I do appreciate kudos. So I'm also one of those guys that's been sucked into the social media part of it too.
Yeah, absolutely. I'm kind of the same. Like I like to sort of manage mostly my heart rate, but a lot of it is just running by feel. And I think the more you run, the more you kind of know where you're at without having to look at your watch permanently. And I run in long sleeves, so I kind of just have it covered. And I think, yeah, for me, it's much more of a feel thing. It's much more kind of about being out there. And then, yeah, in ultra trails, trying not to kind of push through the pain, basically. And there's no metric for how sore you feel, I guess.
Yeah, there's no way of really telling when you're going to go into that cave and how long it's going to take to get out of it. So I guess it's about finding it and then just making sure you have the more mental fortitude to get out of it at the same time.
Yeah, absolutely. All right. At the risk of spending half an hour talking about trail running, which would be very easy for us to do, let's move on. So firstly, let's just do perhaps a bit of an introduction into yourself and also Finch Technologies. I don't know how well people know that. Maybe it's a very niche sort of product, but for those who watch Talk Data to Me, maybe just give us a little bit of insight into what the company does and sort of, I guess, your mission as well.
Yeah, cool. So I think, my background, I jumped straight into early stage business right out of university. Got working for Rocket Internet as my first job. Fell in love with the high-paced world of startups and early stage businesses. I also kind of fell into it that in South African context to the most scalable verticals are food and finance. So I picked my lane being finance because I'd rather just enjoy my passion of eating one and focus my career around the other one. And yeah, been on this journey for quite a long time and really trying to find our mark in it. So Finch was really born out of the idea of trying to help consumers and lenders find better products for themselves. And we went on a journey building what is still probably one of the largest consumer and business marketplaces out there. COVID came along and smashed the business. So we had to do our first or major pivot then. And we looked at our belly buttons for a day or two and we're like, cool, we great relationships with these financial service providers. We understand data and we think we know how to build technology. So we've gone out and built a product, which is Gather. And essentially what Gather is, it's a data marketplace to get, ID information, but primarily affordability information from your bank statements, and then helping people, the cut banks and lenders and insurers and telcos that use that to make sense of that data. And that's kind of what the mission that we're on. I think, behind me we say powering financial access in Africa. And that's quite a bold statement, because at the moment we're only doing South Africa. So there are ambitions for growth beyond it. And the way that we see us impacting financial inclusion or financial access is by using technology like ours. We really think that there's an ability to bring down the cost of processing or cost of processing for an application, as well as increasing the amount of data that can be used to make risk decisions. And that's our little niche and lane that we're going to stick into, and we're just going to carry on plugging and chugging into it there.
Cool. Awesome. Good stuff. All right. I'm just reading on your LinkedIn page. It says financial service providers experience enormous inefficiencies when trying to reach consumers in an ever-increasing digital world. But by using sort of your data-driven solutions, etc., you can create a healthy and financially inclusive population. And I quite like that. I think a lot of people talk about financial inclusion, financial inclusivity, etc., but I'm quite interested in the healthy part behind that, because it is quite easy to kind of include people into the financial system, but kind of drag them in, and they really probably shouldn't be getting credit, etc. It can be quite destructive and dangerous, etc. So you've kind of put that healthy, responsible elements, I guess, into it, which is, really critical, I guess.
Yeah, so I think, the early models, in particular in South Africa, around financial inclusion was just disperse product, just get it out there, make sure everyone can get the products. And typically these products tend to be lending products and insurance products. But we've seen the market kind of evolve on both sides, where the financial service providers are looking to do it in a more sustainable way, because they've seen the impact of the losses on just, putting the hose pipe down the throats of consumers, and also consumers becoming a little bit more circumspect to it as well. So on both sides, we've seen that change. So where we see healthy is making, we want to provide that affordability data so that a lender or telco can make the right decision in terms of what products the consumer can afford and can take on. But also at the same time, understanding that consumers tend to want to bite off a lot more than they can chew sometimes. I mean, we've all probably been there. So it's not looking down on anyone. I mean, I found myself in a position as well where I've probably bitten off a little bit more than I can chew. So it's all just naturally part of it.
All right, perfect. All right, so you kind of mentioned there that you use it's based on transaction data, which is obviously quite voluminous, I suppose, depending on that you're looking at and how sort of frequently they transact. But a lot of that then comes in as unstructured data. You make the decision relatively quickly or very quickly, which you can kind of get into in a bit. And maybe also talk about how critical data quality is, because that I really think fits to the theme of the series that we're doing. So I've asked a very multi-layered question there, but maybe talk us through the transaction data, the unstructured data, the categorization engine that you use, and just, I guess, the nuts and bolts and mechanics of how all of this works and how you get to the lending decision.
Awesome. So, I mean, just looking back on a call I had a couple of minutes ago with a prospect, it takes one of their analysts about 25 minutes to assess an application when they receive a bank statement. We're saying we can do that in less than 5 seconds. And when we're talking about less than 5 seconds, it's extracting all the information either from the banking profile or from the statement or the scan statements. And then essentially, as you alluded to, is categorizing it and categorizing those transactions into fields that can be worked with by the risk taker, being the bank, lender, or telco. And that's how quick it works and makes it that simple. We've taken the view, and it's the view right now, and it's open for change. So people reach out to me, that holistically what we want to be doing is getting the best data into the hands of that risk taker. So we don't really want to be creating that black box risk model, the old Experian 625 score, you're shop ready to go. We really do believe that institutions and fintechs have the ability to build their own models, provided that they're getting clean, accurate, well-tagged data. So we've gone down the route of tagging that data in the best way possible to allow them to build these risk models. And I can't hang my hat on it yet and say that it's going to be the winning strategy, but that's where we're at the moment. I guess, the last tier of your question was how we've gone out and built our categorization model. And first of all, it was a wild journey. And it was me and some colleagues literally going line by line, looking through transactions, saying, through a whole validation process. So first one, categorize, second, confirm, third, validate it. We went through about 750,000 transactions that way and categorized them, and we fed them into a model. And we've kept on training that model as time goes on in terms of the fields that are guidelined by the National Credit Regulator to understand. And we picked up some really interesting learnings along the way. So the first learning that we kind of was glaringly obvious in hindsight was the cohort of users that had been going through our platform were predominantly lower LSM users. So the very first test we put in was my bank account, and it poorly classified my home loan. And that was just because the model hadn't come across a home loan field yet. So we had to find different kind of sets of data and train the model that way. Yeah.
All right, perfect. So I mean, it's kind of still comes down, like obviously it's all the data that you get, it's people's transaction data. So is it more about the categorization? Is it about the data quality? Is it a fairly sort of uniform sort of thing that was a transaction into this, or does there still quite a lot of remediation and stuff that's required, or is it the model kind of at that point now where you pretty comfortable with the accuracy that it can give in terms of a lending decision?
Yeah, we're very comfortable with where the model's at the moment. I think it's, as I was chatting earlier, it's an ongoing process. We're still going to have to train it. I firmly believe in kind of man-in-the-middle intervention around these types of models in particular. So we do have people that are helping train the model on a consistent basis. And there are going to be anomalies that pop up. I mean, I was chatting to someone the other day they've gone out and built a categorization model that's bespoke per person, which blows me away. I mean, that's kind of wild what they've done. But some of the anomalies that we've picked up is just typos. So when someone types in, that this was a gift and it might have come across as grift, we might classify that as something dodgy, but it actually, in the hindsight or in real world, it's just someone giving a gift. Yeah.
All right, and let's kind of getting this into the next phase of the model and everything that you're getting around explainability. Where someone maybe doesn't get approved for a loan or credit or whatever it may be, and they kind of, well, they ask why. They have the ability to kind of work backwards and say, well, these are all the things that we inputted. This is where you're at. This is why we can't lend to you right now. You obviously give that information to the bank or the telco, whatever it may be. Is that explainability there yet, where people can kind of ask that question? I always think about Little Britain with the computer, and it's like, computer says no. You're like, well, why? Are you at that point now where you can give people that decision, or is it kind of sort of at the point where very rarely do people get sort of turned down for credit, lending, all that sort of thing based on the information that you've got?
No, so I think we're unfortunately in a context in South Africa where rates of approval, and if you go look at the kind of National Credit Regulator's data, I think it's about a 10% approval rate on loan applications. So regardless of what we do, there's still going to be a low approval rate in terms of even if we're getting the best quality data. And to be honest, it's not something that we've thought about in terms of making that kind of more consumer facing, but it's definitely a potential way to go. Is about helping people retrain their finances so that they can get to a point where they're able to afford a product that they're looking for at a later point in time. And a lot of these tend to be just small behavioral elements that can be nuanced and nurtured. So, we do look at the negatives that come across in the bank statements and positives, and we could give the field or the user the ability to say, like, guys, just make sure that you make this payment, or if you're taking out a subscription, rather cancel the subscription rather than it fail on your account. And yeah, small nuances like that are definitely things that we could do. I think the best distribution are still going to be our partners in the field, so the lenders, telcos in the space as well.
Yeah, all right, perfect. All right, so you say you can make a decision in under 5 seconds versus 25 minutes. I think what pops into a lot of people's minds when they hear that is AI, generative AI, all that sort of things, like hyper speed, immediate decision, feeding in like, huge amounts of data and sort of incredible compute speed, etc. But you're not really at the AI point yet, which I think is cool. And I think it's refreshing. I don't think it's, it's certainly not a sort of a markdown. I think too many people rush into AI, don't really know why they're using it, and probably not really using it properly anyway. What has sort of been some of the decision criteria you've had around not jumping onto the AI hype cycle just yet?
Look, I'm fully on board on the AI hype cycle. I just think our fit wasn't quite there yet. And I think the why AI is not quite ready for what we're doing yet, or at least the kind of AI models that are out there, is essentially just the speed to process as well as the cost to process those transactions. And so if you compare what ChatGPT 4 for 1,000 transactions was in itself taking a couple of minutes to categorize and return, we're able to do under 5 seconds. Similarly, the cost to run that ChatGPT process was multitudes more than our own hosted machine learning model. So I don't think the application for AI is quite ready for where we're at, and that's primarily based on speed and cost. We do see a lot of opportunity in the space, and going back to your case earlier about the feedback to the consumer, how cool would it be to have an interface where you could ask, I don't know, chat whatever, what can I do to improve my transaction patterns so I can afford a car? And then it feeds back, these are the types of things that you should stop doing and listing those transactions. And that's all very real stuff that you can get to. It's just about allocating those resources, both human capacity and money, I guess.
Yeah, no, I think it's good. I think it's, kind of having it fit for purpose rather than just putting it in there because everybody else is doing it. And I think as a result, you'll get, once you do get to the point of using it, it'll actually be a lot more valuable. And I like the idea around the chat, some sort of chatbot, FinChat, whatever it may be, sort of, if somebody does get to that point where they don't get the sort of lending amount that they wanted or the credit score is low or something, but kind of the financial education, which I think is a big part of that sort of low lending percentage, I'd imagine in South Africa and most sort of third world countries. It's just the financial sort of literacy is relatively low for the most part.
I'd love to do more in the kind of space of helping people understand their capacity and their ability to do it, but head on focusing on B2B sales, it's kind of hard to pivot your mind back into the kind of consumer origination process.
Yeah, cool. All right, Chris, any sort of closing thoughts from you around the use of data and insights, analytics, et cetera, that's going to help financial inclusion in general, just to kind of round off the conversation?
Yeah, I think just like to kind of round it off is just saying that we're in a neat space at the moment where we are able to use machine learning models or AI to kind of change the way that finance has been done historically. If you look at typical bureaus and bureau models, they've been reliant on historic data that's gone back, a couple 100 or 50 to 100 years, and it relies on that historic data. Not everyone has had access to contribute to those data sets, but we're now living in a place, or in South Africa at least, where everyone is able to contribute to their own transactional data sets. So I'm really excited about working on, I guess, what we view as models that could be more inclusive than just your typical credit bureau models.
And actually, last question, which I was meant to ask earlier, do you have some sort of goal, target, metric in terms of the amount of lending? You obviously say it's quite low, people that get approved. Do you have some sort of target in mind, and your small way you can make a difference and uplift that by 1%, which might mean thousands of people get more sort of access to the financial system?
Yeah, so our goal is to broaden that by about 5%. And when we measure that 5%, it's about one, the ease of getting the information to the lender, telco, etc. And then two is by broadening the data set that's being used. And we think the 5% is kind of an ambitious mark, but it's one that we're keen to go after. And I think, it drives one great product that we need to create in terms of ability to use. But at the same time, it also forces us to be really tight and focused around the data that we're aggregating and creating for these lenders and telcos.
That's all right. Well, all the best with that. Chris, it's been great to chat to you. Thanks for the insight into Finch Technologies and the work that you're doing. And look forward to seeing you on the start line in November, UTC T55.
Yeah, hopefully see you on the trails beforehand.
That would be great. All right. Keep well, Chris. Thanks.
Cheers, Craig. Thank you.
Cheers. Bye. Cool.